Hello everyone, my name is Het Raichura and today in this video we are going to learn about Volatility Index. Volatility Index or VIX is generally used to measure the expected market movement. From the normal volatile market, it suggests that how much high or low the current volatility is. VIX is often called Fear Index or Fear Gauge. Let us see the timeline of the VIX. Initially, it was launched in US market in 1993 by Chicago Board of Options Exchange, and then later on in India it was launched in 2008 by NSE. VIX is an annualized rate measured in percentage. Calculation of VIX is very simple. For example, if VIX is 15.35, it means that the Nifty index is expected to move 15.35% in coming year. And to calculate the monthly movement, simply divide the VIX by root 12 and you will get 4.43, which means that the expected monthly movement could be 4.43%. Let's see the limitation of VIX. Although VIX tells us the expected movement in the index, it never indicates the direction in which the markets are going to move. So continuing our example from the previous slide, all we can say is the expected movement in the market can be 4.43%. This movement can be 4.43% upside or 4.43% downside. You might be wondering how to analyze VIX. Market generally considers VIX below 11 very low, anything in the range of 11 to 20 a stable one, and VIX above 20 very high. So whenever the VIX is between 11 to 20, market volatility is stable. During the March 2020, the VIX touched all-time high of 86.63. This chart will give us more clarity. VIX helps us to know the expected performance in the market for a definite period, say 1 year or 1 month. Volatility implies the tendency to change. So when the markets are highly volatile, they may move steeply up or steeply down, which indicates high VIX. And when the market show little or no movement, which is next to impossible for Nifty, we can say that VIX is very low. So, to conclude this video, the VIX is very good indicator of expected market movements. A very low or very high VIX category indicates the abnormality in the market. But again, we cannot predict the direction and hence if I say the VIX is high, the market can be very bullish or very bearish. On the other hand, a VIX in the stable category indicates a stable movement in the overall market. And remember, VIX is a good indicator of the mood of the market, but it is not the sole indicator, and we should always consider different indicators and parameters before investing or trading. Thank you. Hope you learned something new from this video.